Uh, Hey guys, on this video, I'll be teaching you how to trade with trend reversal structure strategy, which is TRSS. This strategy have helped me a lot in trading and it have made me profitable since I've been trading. It have helped me a lot, all right, in becoming profitable. So I'm going to show you guys how this strategy is being used, how you can make use of it in the market, how you can trade it in the market. First of all, on this strategy, you have to discover the major swing highs and the major swing lows, because we have the major swing highs, we have the major swing lows. It's not there are at times you see some charts like this very, 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 very messy. But to identify the major swing high in the market and the major swing low in the market is what some people are finding difficult. So in this video, I'm going to be showing you how to identify these swing highs and these swing lows. All right, so you're looking at this major swing high. On this major swing high, you have to identify on this major swing high, you have to identify the highest level the price got to before make rejection, pushing back to this swing low. Before pushing back to the swing low. All right. So on this swing low, you have to identify another major swing high. The major swing high. You see it, and this major swing high must take down this major swing low. It must take down this swing low here. It must take down this swing low. Let me change it to dot. Yeah. You see it, it must take down this swing low and then creating a new swing high. This high it will be called the next swing high. This high will be called the next swing high. And after you create this swing high, then what happened? The highest level the price got to before pushing back this down is called your major swing high. And then pushing back to the major swing low. And then pushing back to the major swing low. The lowest level the price got to before pushing up to break this high is called your swing low. So the lowest level the price got to before breaking this high is called your swing low. So what happened? Price broke this high and then went back up to create another swing high. To create another swing high on this particular zone. What happened? Hold on. I think what happened? Okay, to create another swing high. What happened? Price pushed down to create another swing low. This is the lowest level the price got to. You got it. This is the lowest level the price got to. And if you take it out, you will notice this is the lowest level the price got to before pushing back up. And then pushing back up, breaking this high, which is another swing high on its own. You see it breaking this high. What happens as it broke the high? What happens? It came back down. This is changing structure. Now the price, the market is changing structure. What happened? In order to identify change of structure, price have to break this swing low, which it has made before continuation. Once price break this swing low that it's just created, notice that price have changed our structure. All right. So how can you identify these lows is what matters. I'll still show you in the chart. All right. So this is the swing high. And then what happened? Price broke through and then took down this our swing, this swing low, the major swing low that the price created. What happened? Created another swing low. And if you notice this low, if you notice this low is lower than this, and then what happened? Change of structure occurs, and then the highs becoming dropping down, which is telling you that the market is bearish. The sellers are in the market pushing the price down. You see it, the swing lows are now swinging down. You see it, are now swinging down. So let's get this in the charts, and then what we just explained, let's check it in the chart and see how it plays out. All right, this is it on, I'm currently on GBP Euro GBP. This is it on Euro GBP. Okay, let me refresh the chart. Let's see how it's played out. Okay, this is a chart, and what the price is doing. If you notice, before price started pushing up, what happened? Price created this low. This is the lowest low. This is your major low, the lowest low that price created that pushed to this high. What happens? Let me reduce it to 2. What happens as it push to this high? Let me take another one. This is the lowest level that the price made. What happened? Price made this low, and then what happened? It pushed to this high. What happened? Push to this high. This is the highest level that the price push, and then what happened? Making another low. This is the lowest point. Price created another low, and if you notice this major structure low break, look at the impulsive move, took down this high. You see it took down this high, impulsive to this highest point here. This is how you can identify this is another major structure high here. And then what happened? Price pushed to the low. So as price pushed to this low, what happened? Let's push to this thing. What happened? Price came back and then created this low. Made this low double bottom here. You see it? Price made this low. Is this the lowest? Made this low double bottom and then came back up here. This, if you notice, this high wasn't able to take down. What happened? Price created this high. Price created this high. This is the highest point straight that the price made, and the lowest point is this. This is your lowest point. If you notice, this is the lowest point that the price created here before the impulsive move. After these highs, what happened? Price pushed all the way to this down because this high wasn't able to take down this high. So I won't consider this a structural high here. You see it? So the next structural high is the point that it will take down this high, which is this. You see, this is the structural high that took down this high. And if you notice this low, this is the lowest point that the price got to, and not this. That is why I ignore this after marking it that. I noticed that this is the lowest point, and I have to come back here. And then this is the point that the impulsive that the buyers took points and then started pushing back up to break this high to show you that the price is still on uptrend. So this is how you can trade confidently. Price is still an uptrend. So what you have to do is to take out your tools, mark this high that it created, mark this high that it just created now. You see it? How to use this strategy if you are if you are swinging on the daily time frame, if you're analyzing with the daily time frame, you analyze this on the daily and then trade it for 4 hours time frame. Okay, that I will come next. This is the high. If you notice this high took down this high, what happened? Price make this low. There is here. You see it? Price make this low. Okay, let me remove this. This is the lowest point that price came to, and then before pushing out. So what are you expecting price to do here? Price will have to push all the way to this down, because price will have to push all the way to this down to test this low, because this is the high that was broken out. So what price can do is to make some trending push. It can come here, makes a double top, and then still coming back all the way to this down, which it have created. Or definitely it can just come straight here, you know how price will do, consolidate, try to confuse the newbies, consolidate, trying to confuse the newbies. I'll be going up. Meanwhile, the price is not going up. You see, it's still pushing down. If you can push down, then use a momentum candlestick hit back here. You think that the sellers are taking over the price. Meanwhile, the buyers are still here, waiting to push the price up. You see that? And once a momentum candlestick is closed above, is closed below it, note that the character have changed. If the momentum of the candlestick didn't close and it came here rejected, knows that the buyers are in the market. But if the body of the candlestick closes below the low, look to sell. All right. This is it. If you close below, you see it hitting back here, and then you follow it down. All right. So this is how you can identify the structural highs. You can see it. This is the highest point. Price created this high, and then made this low. After this low, what happened? There was an impulsive move to this high. It must take down this high here. That is why some traders will take their TP. If you notice, some traders will take their TP at this particular high because they know what they are doing. They know that price can come to this high, and then some price will come to this high, make some double top. So to avoid those kind of fake outs, they will just take their TP here. All right. So then imagine you took your entry from this zone, at least took your entry from this low to this major high here. Should have been a nice entry. 2 ratio, at least 2 ratio is a good zone. If you take 2 ratio, it's a very nice trade here. It's a very nice one. All right. So created this high. So this is how you can identify that the price is an uptrend. This high must be broken. It must be broken. Look at this high. It must be broken to show you, to consider that, to tell us that we are still on uptrend, where the price is still trending up. To show us that the price is still trending up, it must be broken. So once the price break a particular low, what will happen? Price has changed character. Look to do what? Look to sell. So there is it. There is it. There is it for this video. The trend reversal structural strategy. This will help you to identify the market structure very perfectly. Know what the market is doing next. It's a very simple strategy. Know what the market, what you have to do is to pay attention to what the market is doing. All right. Mark out the high. Allow the price to take out the high to show you that the price is still an uptrend. Then wait for a retracement that will push the market's price back to that high. Okay. So this is it. Created this low. What happened? Push back to this high. Created this high. So that is actually the same thing I drew here. I drew above earlier on this video. This is it. This is what I just drew here. This is what I just drew here. If you see it, this is it. This is what just played out in the video. This is it. You can see it. This high was taken out. This low was taken out. This low was taken out. This high was taken out. This low was taken out. This low was not taken out. This high was taken out to show you that the price is still on uptrend. So whenever this low is taken out, know that the price have rejected. All right. And the time frame for trading this, the best time frame for trading this strategy is if you are trading with the 1 hour, if you are analyzing with daily time frame. Okay, if you are analyzing with the daily time frame, if you are analyzing with the daily, if you're analyzing with the daily time frame, or so your entry, where you'll be looking for entry. If you're analyzing with daily time frame, where you'll be looking for entry. Entry should be 4 hours. There's 1 hour difference. The entry should be 4 hours. Then if you're analyzing with 4 hours time frame, If you're analyzing with 4 hours time frame, then entry should be 1 hour. You should take 1 hour as your entry zone. All right. So if you're analyzing with the 1 hour time frame, your entry should be 15 minutes. All right. And for the scalpers, if you're analyzing with 15 minutes time frame, your entry should be 1 minute, 5 minutes. Your entry should be 5 minutes, 5 minutes, 1 minute. All right. So this is the best time frame to trade this strategy profitably. So like this, I analyze from the 15 minutes time frame. Okay, if I want to take my entry, I will have to go down to the 5 minutes time frame to take entries on this particular zone, on this particular trade. If you notice, okay, this is it. Okay, look at it. Here from this zone to this zone, is it not massive? There's a very massive. So if you break this zone, test to here, there is a very good one. Here to here is a very good reward ratio. All right. So whenever it break this low, it will just keep selling. And whenever it break this high, it will keep buying. Shows that the buyers are still in the market, that we should just keep looking for a buy. So that buy will be buying for long. Sell will not be selling for long, but buy will be buying for long. All right. So this is it. If you are not subscribe to my YouTube channel to get more of my tutorial video, right? Subscribe to get more of my tutorial video. And this is it. This is it for now. This is it for now. All right. So try to backtest on this strategy. Try to study this strategy. Okay. It's a very nice strategy. Whenever, if you know it, it will help you identify the market trend, what the market is showing you, the market structure. All right. So this is it. Pay attention and study this strategy. It will help you a lot. To help you a lot. Trust me. Okay. So this is it. All right. Don't forget to share, like, comment your, if you backtest, comment, put your comments of how you see the strategy. Let me know how you guys see the strategy. All right. And those of us that have make use of the strategy, you can comment below how the strategy have improved and work for you. Okay, whether good or bad. So I'll know how to post more strategies for you to trade that will be suitable for you. All right, to trade. So this is it. Take care and bye for now. Okay, take care and bye for now, guys.